Our economics guru, Dr. Ravi Batra, the professor of economics at Southern Methodist University, internationally known, internationally best-selling, New York Times best-selling author of Greenspan's Fraud, a book you really have to read to understand what went on in the 80s and 90s and really up till today, and the New Golden Age, the coming revolution against political corruption and economic chaos, which, a year and a half ago, 2 years ago, predicted the election of Barack Obama, Dr. Batra?
That's right. I finished the book by the end of 2006, and I predicted that a minority president would be the next one, and also he would be a man of great courage, and he would simply unseat the establishment, and that's exactly what he has done.
You have an uncanny record of predicting these things, sometimes down to the month. We're talking with Dr. Ravi Batra, R-A-V-I-B-A-T-R-A, RaviBatra.com is his website. Ravi, I got an email from a friend of mine in Vermont he keeps very close track of all this, investment stuff and whatnot. And over the last decade and a half or so, I've made a fair amount of money just following his investment advice. I mean, he's just a friend, but, he reads all the newsletters and he's really into it. And I'm not talking about day trading things. I mean, I basically tend to buy something and sit on it for 3 years and then make a change kind of thing.
Okay.
And back, about 5 years ago, he said, sell everything and buy into gold funds and oil funds, and boy, did we do well as a result of that. Anyhow, he just sent me an email, and I'd like to share. It's only a couple of sentences long. I'd like to share it with you and get your thoughts on it. He says, first of all, he starts out quoting Jim Sinclair, who's got a website called JSMineset.com, as in Jim Sinclair Mindset.com, which I read frequently. I think it's a very good one. Pressure is picking up in the demand for the Fed to outline what they have done with the trillions put into play and to disclose what their inventory of, quote, assets, end quote, is. Thank Bloomberg's lawsuit, by the way, for that. It is a very bad time for the Fed to refuse. Cooperation, however, might actually cause a major embarrassment in the dollar, and soon. And then my friend Mike says, Thom, verily, verily, I say unto you, we have an Argentine-style dollar crash in our future. All the obligations/debts/derivatives being taken on share one thing in common. They are denominated in U.S. dollars. They politically can't default on the debt, but debauch the dollar and you've destroyed the debt. Oldest trick in macroeconomics, and lots of zeros in the currency. Debt goes away, but the poor and middle class are decimated. Think Weimar in Zimbabwe. Hold gold, buy stock gold, mutual funds, double bottom today, possible end of correction and resumption of uptrend. God bless Mike. What do you think?
Well, I think gold is a good buy right now. And again, this is only my opinion. I don't like to give financial advice. I mean, I'm getting a lot of emails from your audience, by the way. They're very worried and they want financial advice from me, and I just don't do that. I can tell you.
Yeah, you're an economist, not a financial advisor.
So even if I were, because there are liabilities involved, and right. I could give financial advice, but I don't want to.
Yeah.
But last time on your show, I suggested that if you want to buy gold, buy some gold shares and then sell options on those. Like I suggested, this ABX, which is Barrick Gold. ABX is a symbol for that. Now that was selling at about $20 last time with an option premium of about $2.50 or something. It came to about $10 return for 1 month, and I thought that was not a bad buy. Now it has gone up slightly. It's 23 now, and it is still a good way it's still pretty good in terms of historical prices. It was $50 6 months ago. Now it's 23, and the option premium is still about $2.50, $3 for a 2-month option. That's the way I would get into gold, because it has gone up sharply.
Yeah. Well, let's talk about the big picture here, because that's your specialty. We're talking with Dr. Ravi Batra, professor of economics and internationally best-selling author. Where are we at, Dr. Batra, in this cycle that you described in the New Golden Age? It seems to me that we're probably within a year of hitting bottom, but there are others who are suggesting that maybe right now is the bottom.
No, it's not the bottom right now. No.
Yeah. There's too many layoffs going on right now that have not yet seeped all the way through the economy.
It has just started, and I know it has started so badly, so it seems like a bottom. It should be a bottom, but and looking at the recessions in recent past, this should be a bottom, but no, it's not a bottom at all. In fact, see, right now nobody is really in charge. It's a transition time, and watch out for really bad falls in December and January until Obama takes over. This is a very tricky, precarious time. But the sad part is that it doesn't have to be this bad. We can easily fix it, and I have outlined my reforms in the book, and the reforms are very easy to introduce. Just look at the auto industry, for instance. It's in really bad shape, and they are talking about, I think, about a $50 billion bailout, $25 billion now, and then another $25 billion later when Obama takes over. They're talking about a $50 billion bailout. And first of all, how many of these bailouts can they do?
Right.
Not the amount of borrowing that the U.S. federal government can do is not unlimited, and there are going to be bad consequences, and one of them could be the crash of the dollar, which you just mentioned. Yes. A simple way would be to buy. The government buys up, say, 60% of GM stock. It's selling at less than $3 a share, so it will be about a $1.5 billion investment. Sell those shares to the workers of GM at a very cheap rate. Maybe just give them away because the government is willing to spend money anyway. Mm-hmm. Sell those shares to the workers of GM. Let them manage their company because we will then have forced out the current management, which is responsible for the horrendous mess to begin with.
Wow. Yeah, sell the shares to the workers and then immediately call a shareholders meeting.
That's right, and then they will elect their own board of directors. They would also select their CEO from their own ranks who knows the nitty-gritty of the auto building. They're not paper pushers like the current CEOs are. They just want to do deals rather than, hey, introduce some new technology, build some efficient models which the public wants to buy. The other Japanese producers and other producers are not doing as poorly as ours. Mm-hmm. And the reason is that ours, they just are not interested in doing what the market wants.
Right. So now, when you look at the Argentine currency crash, you invoked that, my friend Michael did. I've seen the graphs on that, and literally the Argentinians, I don't know what day of the week it was, but like, for example, one Monday night they went to bed thinking everything was fine. Tuesday morning they woke up to news stories and rumors of problems, and by Wednesday, $100 in the bank was worth $15. I mean, it was like a crash that happened within a week.
Well, I don't think that kind of thing can happen to the United States. I can see the dollar falling sharply, but not a total crash like that of Argentina. The reason being, if the dollar falls very sharply, the rest of the world will not be able to sell anything to us, and they don't want to do that. That will kill their economies too.
So the Japanese and the Chinese will buy dollars to hold the dollar up, as they've been doing.
That's what they've been doing, and still their currencies are rising, so they'll contain the dollar's fall to the best of their abilities. That will prevent the crash.
Now, what do you think about all this speculation that the carry trade is the only thing that has been driving up the value of the dollar? The carry trade being where people go to countries where interest rates are very low and they buy a lot of that currency. They borrow a lot of money in that currency. For example, the dollar right now, our interest rates are, 1.5%. And then they take that money and they buy bonds in a nation where the interest rates are 6 or 7%. They pay a higher rate of return. At the end of the year, they cash in those bonds and they pay back the dollars, and they make a 7% return on their money for doing absolutely nothing. And there's this enormous carry trade out there that used to be denominated in yen, and it seems to be shifting to dollars right now. Is this a factor?
That's one of the factors, but that's not the major factor. But it's certainly a factor now. But what the biggest factor is, what people like Goldman Sachs and Morgan Stanley, the ones which are being bailed out now, what they did in the past, and now their actions are driving the dollars back.
Okay, so I'd like to get some more details on that when we come back from the break, and you can stick around and take calls with us?
Yeah, sure.
Can we do 45 minutes today? We've got Al Franken coming on at 45 minutes past the hour, but great. Okay, thank you. Dr. Ravi Batra with us. And we'll be taking your calls for Dr. Batra right after the break. 16 minutes past the hour here on the Thom Hartmann Show. RAVIBATRA.com.
This is the Thom Hartmann Program.